welcome to the View from ADB. We are in Frankfurt for the Asian Development Bank annual meeting, and today I'm joined by Yves Mersch, member of the Executive Board of the European Central Bank. Mr. Mersch, thank you very much for joining us.
Thank you for inviting me. Hello.
So we were just sitting on the same panel just a few minutes ago talking about opportunities and spillover effects of links between Asia and Europe. I think it would be interesting to know from you if the domestic mandates of central banks at the moment, are they sufficient to take into account potential spillover effects between Asia and Europe?
Basically, the mandate of a central bank is not defined by the central bank itself, but it's part of a mandate given by the legislators. It's a democratic mandate and it is varying from one jurisdiction to another. The mandate of central banks is sometimes dependent also on historical developments, and the same goes for the objectives it has to follow, for the instruments that is being given. In some countries the instruments are rather narrow, in others they are very broad. And it also goes about its history of implementation of this mandate. And therefore, to believe that we would have the possibility of having a seamless monetary policy worldwide is a little bit belonging, I would say, too much to the realm of science fiction. But on the other hand, it is true that at the aftermath of globalization, we have seen that each policy decision that is taken in one jurisdiction, whether it belongs to the monetary policy area or to the macroeconomic area, also has increasingly impacts outside this jurisdiction. And the increase and the importance of these spillover effects on the one side, and on the other side, the inefficiency of shielding an economy against these spillover effects, of course, would make the case, at least in logic, to increase the dialogue and to increase the coordination.
And in fact, you are a strong advocate of trying to form institutions that look at macroeconomic policy coordination and to try and have a more active dialogue amongst different parties. What is the situation in Europe at the moment, and could we learn something from Asia?
Well, I would say Asia has recognized also early on the need for such macroeconomic coordination and has set up an observatory to monitor the situations in different countries. But let's not forget, Asia is not in a monetary union. So the reason is much more compelling if you have a single currency, as it is the case in Europe. And for that reason, we already had early on a obligation to have a certain amount of coordination, but what would remain national economic policies. Now we have seen during the crisis that this might be suboptimal, because we would have the risk of having macroeconomic imbalances developing in one country and spill over to other countries. And therefore, the absence of coordination has a cost. And this cost easily translates in thousands of jobs, easily translates in several percentage points of lost growth and economic welfare. And therefore, we believe that in order to complement the architecture of an economic and monetary union in Europe, we need to reinforce this economic coordination.
And do you think that therefore it would be a good idea in Europe to set up an institution actually that looks at macroeconomic policy coordination, and how far would we be from that?
Well, to some extent we have an institution which already, according to the treaties, is in charge of directing this coordination, that is the European Commission. However, the rules are quite loose, they are not binding, and the approach for the moment has mostly been an approach of peer pressure. Now, this is always the first stage. In a crisis time, very often peer pressure proves to be inefficient or insufficient. So the question arises now whether we need to go beyond and to establish a certain amount of rules where we would have early warning indicators, which would be associated with some automatic sanctions for those who would not heed these early warnings, and this is a direction in which we might have to look further into the future, even though at the moment this is not on the agenda. This is just a proposal which only engages the one who speaks.
Well, good luck maybe on pushing this proposal. When we talk about monetary policy at the moment, of course, in Europe, in Japan, there are negative interest rates. Europe and Japan and elsewhere, there's quantitative easing. Do you think that we are reaching a point where monetary policy is being overburdened and maybe there should be policy action in other realms of the economic environment?
Certainly, where there is fiscal space, this space should be used. And I think monetary policy is always more efficient if it acts in combination with other policy areas. And therefore, if you have only monetary policy, you have a suboptimal outcome, because basically monetary policy operates in the short end, and you need to complement it with action either in the fiscal side or on the structural policy side, which are more long-lasting and more sustainable.
How do you think Europe is doing on that front at the moment?
I would say could do better, but I would not say nothing is being done. You must acknowledge that the fiscal consolidation has worked to some extent in Europe, that many countries are about to regain again the beginning of some fiscal space. In some countries they have it, and it should be more proactively used also, especially if those countries have very low, below trend investment levels. But then structural policies, the situation is very heterogeneous in Europe. Some countries needing more labor market reforms, which are excessively rigid labor markets. Some have product market reform need. Some need both. Third countries say we cannot start having reforms if our institutions, for example, the judiciaries or our insolvency laws are not speeding up the reforms. Otherwise the transmission will not work. Then you have also areas of structural reforms where I would say the union as a whole is requested to act. That is, for example, in the consolidation of the banking sector on the one side, and the consolidation of the banking sector indirectly also asks for a diversification of financing of the economy, which in Europe is excessively done exclusively through the bank lending channel.
And in fact, in terms of the banking union, I mean, what kind of progress do you think Europe has made, also in light of very high NPLs and, as you said, a strong need for bank consolidation?
Well, we have, tried to separate the nexus between the sovereign and the bank. Second, we have created a single supervisor which is not influenced by national considerations. Third, we are now moving towards eliminating the excessive amount of national exemptions, options, discretions, which were needed in order to have a single rule book, but now the rule book will truly become single. Fourth, we created not only the single rule book during the bank's life, but also to wind them down. A single resolution fund has been created, established, started working, based on a single instrument, the Bank Resolution and Recovery Directive. And then what is still missing is the last pillar of a banking union, that is deposit guarantee insurance, where we will also move in stages, because it is understandable that taxpayers from one country would not like to pay for the errors that national supervisors in other countries have committed.
Perfect. Well, Mr. Mersch, thank you so much for your time, and good luck with the rest of the meeting.
Thank you for you as well.
Thank you.
You.